counter venture catalysts and unicorns. You may put in your questions on the chat window, and we will try to respond to a few of them at the end of the session. With that, let me hand it over to Mr. Sagar Agarwal. Over to you, Mr. Agarwal.
Thank you, Shivani. Welcome, Dr. Apoorva and Victor. Thank you for so much for taking out time for joining this event and the panel. Today, we are here to obviously discuss a very interesting session, which is growth stage investing in fintech in India and globally at the same time. Before I jump into the topic and discuss the topic, right, I think let me just give a quick introduction about Dr. Apoorva, myself, and Victor as well. So I'm, as Shivani mentioned, I'm the co-founder and managing partner at Beam Fintech Fund. Been in the private equity venture capital business for 15 years, been part of 3 private equity funds, have deployed close to $500 million across emerging markets of India, Middle East, and Africa, 36 plus investments, multiple liquid events, exits, primarily leading fintech and financial services investments across most sectors. Across most funds of mine. Also been part of $300 million worth of IPOs, acquisitions in emerging markets. So that's a quick journey and history of what I've done and what I've been part of. Previously, I was at Nimai Capital as CIO and Managing Director, as well as at Evolve Sunyer as a partner. So that's a quick background on myself. Let me introduce you, Victor, who's the first panelist on this platform. Victor, we can see you. Thank you so much for joining. Tech investor and advisor with more than 20 years of experience, more than 10 years in emerging markets. He's originally from Spain, MBA from INSEAD. His current role is a partner at Knuru Capital, which is a growth stage focused, fintech focused fund based out of Middle East, focusing on Southern Europe, Middle East, as well as Sub-Saharan Africa. Victor was previously a part of Delta, was leading the technology banking for Delta Partners. Also, he was previously at UBS and Oliver Wyman in Europe. So that's a quick background on Victor. My second panelist for today is Dr. Apoorva. Hi, Dr. Apoorva. Apoorva is a co-founder of Venture Catalyst and 9 Unicorns, and now obviously Beam Fintech Fund as well. Dr. Apoorva is an advisor to Department of Foreign Promotion of Industry and Internal Trade. It's an initiative by Government of India to foster entrepreneurship ecosystem in India overall. He's been mentoring and investing startups since 2002, established more than 12 incubation centers in India, and has mentored more than 100 startups. Apoorva holds the first PhD in incubation from India, also which is acclaimed globally. He holds an MBA and BTech, as well as diploma in mentoring studies from UC Berkeley. So that's a quick background about 3 of us. Again, welcome, gentlemen. Thank you so much for taking out time. We have a very interesting and challenging topic at hand, growth stage investing and fintech both. It's a very hot topic at the same time. So let me start with Apoorva, your views on what are you seeing in growth stage fintech investing in India. In general, we have unicorns reigning in India. Everybody's talking about it. We have a print article every day. We have an announcement every day. But what are you seeing below the covers if you have to really peel it out and see what's happening in the growth stage in fintech in India? So just want to hear your initial thoughts on it.
Thanks, Sagar. Very quickly, fintech, we've been very actively investing. Bharat Pay is our portfolio in the past, and many Sunyer unicorn companies, we've been part of it. In the last 9 months, there is super action as far as the growth stage investing is concerned. Not just because China is, having the tough time, but because in the last 4 or 5 years, we have produced 18 unicorns and around 20 plus Sunyer unicorns. So especially growth capital, which is coming these days, because if you look into the Indian landscape, a startup landscape, majority of that is coming into fintech. I think close to 5 billion has come in the recent past, and it's only going to grow from there. The ecosystem is very robust around fintech in India, right from the idea stage to Series C and D stage. We are seeing some really good unicorns who have, so that's why the capital is flowing to India in fintech startups, especially growth capital, and some of them and some of our portfolios are also beneficiary of that.
Okay, interesting. No, thank you, Purva. Victor, just your thoughts on what are you seeing? So you're covering large markets. You're covering Middle East, you're covering Africa, and you're covering Southern Europe. So these are three large emerging markets, right? How are you seeing the growth stage space over there in the fintech ecosystem?
Yeah, thank you, Sagar, and great to be in the panel. So I think in fintech today, in growth stage, in the market where we're focusing on, they're probably less developed than what we've seen in India or China. So it's still in development with regulatory wise as well as from an ecosystem build up perspective. So we believe that there are good opportunities to invest at this stage in let's say in the growth stages. We see obviously round sizes upping up. So Series A's of 10 to 15 million, Series B's of 30 to 50. So they're increasing in size as we see all over the world. So that's not very similar, but that's very important for this sector in particular because you need a bit of a longer time, given the maturity in the way the ecosystem has been built up. We see a lot going on in Africa at the moment. I think that's a very hot market. Why? Because I think it's disrupting or leapfrogging in a way that other sectors cannot. A sector that needs access to financial services for the masses, and only with technology and with the new ways of developing business models you can do that, right? So it's the infrastructure build up as well as the services for the underserved people, right? Also, one interesting factor that we're seeing in our market is private equity coming down and investing in venture-backed companies in the space in fintech because they see this is a very large market. They see that they're going to lose the train. So we see the private equity players that normally would require EBITDA and stability to coming into venture. So this is a big trend here because that's where the most regional money is in private equity, not so much in venture capital.
Interesting, interesting. Do you, and I'm gonna ask Apoorva his thoughts also over here. Is that do you guys see the quality of founders as a reason for strong activity in fintech as well? That the quality of founders are increasing and they're improving significantly, and there are a lot more seasoned founders coming out, and that's why that's a sector where we are seeing more capital flow. Yes, the opportunity is large, but still the quality of founders is changing and it's increasing or improving significantly.
So Sagar, if you see, in India we have Paytm gang. We have many such, successful unicorns whose co-founding teams, when they're moving out and they're starting fintech companies, that is actually coming with lots of experience also. So we are seeing it in idea stage a lot because a lot of these guys, when they are starting companies, especially serial entrepreneurs now, so either they are part of the co-founding team or either they
Yeah.
sold their companies to these unicorns. So a lot of such entrepreneurs are coming to us, and more than 50% of them are the serial entrepreneurs. They would have sold their companies to either an Indian unicorn or outside India. So that kind of founders are more and more we are seeing now, and around 50% of the startups they are being done by serial entrepreneurs or the co-founding teams of these large unicorn or semi-unicorn companies. That is actually increased the quality because they have the background and they have learned it while they were doing this part of this such a success stories. So that is actually, in India, actually, especially we are talking about, you're finding people who are coming and setting up not only in India, but they're also setting up in Delaware and other places. So that action is definitely there, and that kind of co-founders we are seeing more and more now. Yes, there are first generations also coming with some amazing ideas. Like I've seen recently, especially some gold loan, and the kids credit cards with some amazing entrepreneurs we've seen. But there are many who are actually done the startups. So that advantage is coming to our ecosystem here, and hopefully we will see more such people coming to come and do startups in Kenya.
Interesting. No, Apoorva, our Indian ecosystem is obviously a lot more evolved, right, compared to where Victor is. Victor is focusing on Southern Europe and Middle East and Africa. Would
Yeah.
there be challenge for you, Victor, to find quality and serial entrepreneurs because they're still probably going through first wave of it? So do you see challenges over there in terms of, especially because if the entrepreneur is serial, he can raise a lot more growth capital, right, which allows us the opportunity to deploy more capital. So are you seeing those challenges, or you think there's enough serial entrepreneurs over there as well?
It's happening, right? In our regions, I think we have two types of second-time founders. One is the founders that have done something in outside of this region, so in the US or in Europe, and they want to solve or crack a big problem in Africa or the Middle East. And you have a few of these that they're high quality. Then, I mean, slowly, but this is now happening very fast. Some of the successful managers into unicorns or almost unicorns in the region, they are going and setting up their own venture, no? And we see the Karim
Yeah.
mafia or the Suival mafia. Those are kind of the Souk or Amazon mafia. So you have these these founders coming and raising their own funds, tackling different problems. They're very smart. They've lived the execution phase or the growth phase, and so they're very strong on really executing very fast and growing companies in no time. So it's coming, obviously, with not the same scale as you have in India, but this is definitely now is the flavor of the month. Second
Sure.
time founders from different mafias, as we call it.
No, I think fair enough. I think India obviously has a larger mafia, I would say, right, in terms of top companies with multiple decacons in India already, and potential to a lot of senior management to come out and create companies and solve problems. Dr. Apoorva mentioned about gold loans and credit card space for teens, right, or debit card space for teens. These are newer opportunities in India. These are newer markets which are not been traditionally tapped. Where are you seeing the opportunities in these markets where you are operating, Victor? Are you seeing still in the payments, the lending, the insurance, or are you seeing that the innovation already happening in newer categories?
So I think in our markets, probably what we are seeing is the first wave of fintech companies, right? So we're seeing people trying to tackle the basic access to financial services, and the neobanks are very different here from what you see in the developed world. It's not doing a UX, UI, better service, better product, lower fees, but it's actually giving access to pockets of demand that otherwise we don't have access to financial services. So I think it's much more interesting as a play than the neobank in the West. Because you're really solving a real issue, and you're creating a market, right? So we're still there. In Africa, you have things like agency banking that is rolling out into rural areas, and the different other not so served markets of the urban cities,
Yeah.
and they're tackling it on a very localized way. So it's quite unique and very different from other places. So I think a lot of learning from between India and our regions can be extracted for sure. And then you also have, I don't know, if I look at hot topic, open banking, right? Open banking, obviously laying the infrastructure for other fintechs to be able to plug and play into banks and into services. Here I see that it's very challenging, right, in this part of the world, because the regulation is not ready, the ecosystem is not ready. It's very quickly you can, let's say, destroy a market from day to night because the central bank decides on pricing for yourself, right? And so here and also it's because we have small markets, we have a few big markets, but it's not like a very large market like India or a very large market like US. You have to go market by market, so it's quite inefficient to build this sort of place, and it will take a long time.
Okay, interesting. Apoorva, since we are on the ground a little bit more and we're seeing this very closely, uh, Indian fintechs have gone more also in the super app way, right? Like they're trying to build everything, lending, insurance, wealth management, everything under one roof, right? And while if you look at US markets, right, there are a lot of vertical plays happening in the US. A lot of people are going and building $10 billion, $50 billion companies in the vertical segments, right? Do you think we will see a vertical play happening in India over the next 5, 7 years, where a lot of companies focusing on single vertical within the lending, within the insurance, within the wealth would come up and become big? And would that attract a lot of capital from fund managers like us?
Definitely. I think vertical play is going to play a very important role in the future. India's the growth which you see in the fintech space in India, not just because you know there is a lot of new sectors which has opened up, which I never saw. Like for example, factoring, right? Today in China, you have 12% companies invoice financing. It is while in India it's only 2%. So I
That's
saw
correct.
good startups in that space. I told you about the which is gold loan, which is more India specific things also, right? There are startups coming. They're launching the cards which are for kids, right? Which was also very interesting proposition. However, there is a lot of new verticals which we are seeing coming. At least 20 verticals we are seeing right now. Where and there is something linked to the agri also coming, because agri is going to the biggest sector in the future. So we are seeing a lot of agri financing startups also coming, right? So the new verticals which are coming in India is primarily driving the growth, and there will be the future. The future growth is going to be from there. While you see, on the other hand, not only the this part, but M&A based startups also growing a lot. Like for example, the Trasho model, there's a lot of money was pumped in 4 or 5 startups in the recent past, largely because they see that these companies, there is an opportunity for acquisition, right?
Yeah.
Especially when the stock market becomes strong in any country, right? M&As definitely grow multifold, right? So you are going to see a lot of M&A based startups also. Trasho model is only one type of model. You will find other models also coming, because we just funded one company in other model also, right?
Okay.
So there are going to be, a vertical growth, vertically focused startups, because now the market is expanding, right? Which was not a case earlier. Earlier the case
Earlier.
was small, right? So now in this particularly in fintech space is going to happen.
Interesting. Apoorva, I'm just taking that point on vertical and how the market is expanding. One thing that I'm still not seeing, and maybe Victor, that applies for your markets also. The future is that banks are not actively investing that aggressively in India or emerging markets than US and Europe, right? In US and Europe, if you look at it, Barclays has its own investing arm, ABN AMRO has its own investing arm, JP Morgan has an investing arm, Citi has an investing arm. They're investing in funds also, and they're investing in companies also. But in emerging markets, especially in India, we're seeing limited investments happening. So, any thoughts around like why banks not proactive in India in investing in these categories?
I think that's changing now, Sagar. The real growth which you see in venture debt is primarily because of the private banks, which they have put in money on the largest players. The real growth which you see in RBF financing, the money is coming from there. In the NBFC space also, banks have partnered a lot, and they are seeing it as a future possibilities. And also and I definitely see this as a newer, very good opportunity for most of our banks. In the recent past, we have seen that banks are also entering into equity financing,
Yeah.
apart from their typical old mandate of being fund of fund into the, and putting in the. So I'm seeing now banks in last 1 year, 15 months actively entering into equity, and actively, finance, exploring newer opportunity, like, putting money in NBFCs, or putting money, with this, kind of opportunity which I just explained. So yes, and I want to tell you one thing, that Sagar, in China also, Alipay exists because of the major integration of most of the banks they have there. So that scenario you will have in India, because it takes time for a ecosystem to mature, and also the banking industry to realize the importance of these startups,
Yeah.
right? So that is happening, and I can tell you that, the day it is fully integrated, the fintech space in India will be one of the biggest in the world. probably you will have at least few decacorns, 5 or 6 decacorns, and 50, 60 unicorns here in fintech itself.
Absolutely. No, I hope I'm banking on that for this fund, that we'll have a bunch of unicorns and a bunch of decacorns for us to invest into. So no, thanks for that. Victor, just taking the same question forward, do you think banks see a large market in the Middle East, Africa, and Southern Europe? Like, is the TAM large enough for them? Because banks obviously would be a step behind than other markets, right, in terms of these markets. So is there activity with banks, partnerships happening, investments happening? Are they actually acquiring, or are they doing anything over there?
Yeah. So, I mean, in our regions, I would say banks are normally quite local. A few have regional footprints,
Presence.
but
Yeah.
not really to the extent that they can, create a pan Middle East or a pan African play. We see more of them doing partnerships and also investing and as alongside the partnership with startup companies, and this startup companies helping them in with their customer base or innovation and so on and so forth. So we think they will progressively do that. But the TAM for me is more for fintech companies than for banks. Banks are very slow to move. But here, I mean, you don't realize, but we have in the Middle East around 300 million population, and Africa is another billion if I remove North Africa. So it's a 1.3 billion
Yeah.
population
Population.
opportunity. This is a very large market, and also you can select the ones that the large markets, and maybe then you are in a 900 to a billion. But this for someone like fintech company that can really expand fast, capture. Obviously, is a hard job, right? But it's I think it's a big enough market for people to realize that here there's money to be made, and that's what we also believe. We are behind, but over time this is going to be huge. And China is investing a lot into Africa, so we see that in a lot of competition from deep pocketed players. We have Sequoia now having made a big project investment in Africa. Founders Fund. So
Yeah.
Africa is the last frontier, but is a big unknown, and people are realizing, wow, this can be really big. This can really be really massive.
No, definitely. This is one thing that we all need to consider, is that Victor and Apoorva, Dr. Apoorva, is that Indian companies are not coming to Middle East enough, right? I think I see a lot of opportunities. One which can be an exit mechanism for a lot of Middle East funds as well and African funds as well, because we are obviously raising a lot more capital. We're raising a large amount of capital, and if we go to expansion straight away to Southeast Asia, or we think about US and Europe, we never really think about Middle East and Africa. Well, there's a huge trade community. There's a huge cross-border collaboration between the geographies. And if you want to grow at growth stages, you shouldn't be thinking about very far ahead. You should be thinking about Middle East and Africa, right? So do you see that trend changing, where Indian startups or African startups or large companies would start acquiring each other in these markets, or collaborating or partnering with each other in these markets? Apoorva, Dr. Apoorva, you go, your thoughts
Uh,
first. Yeah.
Cross-border expansion is definitely set up now, because if you see OYO, they operate in 60 plus countries now, and they same business model. They were the first company to go out and do that. A lot of Indian companies like Lenskart and in different sectors, not just fintech, right, have realized the importance of going global, right, and we are seeing it happening in terms of other sectors. While you see for an Indian company going out and exploring business in Middle East, Indian market itself is very huge for them to tap. That may be the reason why they are still not moving out, right? But as far as the fundraising is concerned, almost every company has got money from Middle East, right? As far as the partnerships in the space, like just Victor told me that there's 1.3 billion population there between this region. I think increasingly when these companies become slightly mature, maybe $1 billion plus, they will realize that the future growth is going to come from the other markets, right? So I'm sure many of them already there, but that's going to grow, because one market can offer you only this much. But maybe because today Indian market itself huge, in the future growth, when they will focus on the future growth, they will go. At the same time, there are some very large institutions in Middle East who can actually help the growth of these companies, in the future. Of course, Victor can put more light because he's right there, and we have been actively interacting and understanding each other markets. Over to you, Victor.
No, I completely agree. It's true that you have a very large market in India to crack, and obviously it's a challenging market. But yeah, I see more and more, instead of trying to aspire to go to US or Europe, the more and more Indian companies need to realize that they have a backyard that is for
Exactly.
them to grab as well, no, and it's very large, and probably needs to be the number one priority for international expansion together with Southeast Asia. And at the end, you are talking about a lot of the business models are very unique and localized to emerging markets, and it's relatively easy to let's say apply what you're doing in India to Nigeria or Egypt. It's much more difficult to apply this in France or Germany or the US. So there's a competitive advantage that startups need to understand and tap into it, because otherwise, at the end, who are we competing with? We're competing with China. So, and Chinese are, very fast on getting where the money is and where the growth is. And they are all over Africa. So the earlier the Indian startups go there, the better, because the competition is there.
No,
Yeah,
absolutely. Yeah. Sorry, go ahead, Dr. Pro.
yeah, that's a very valid. That's a very valid point, which you just mentioned. And typically, I've been visiting Middle East very often. I mean, almost every 2 months. I definitely see a huge market opportunity for. I mean, I saw recently opportunity for, say, for example, payment space. There is still opportunity there, right? So a lot of integrations required there. There are some sectors which, of course, has been tapped, but by Chinese companies, but there's still a lot of gaps
White
which
space. Yeah.
can be filled up by our unicorns. I'm sure our unicorns are definitely looking at market more aggressively. They will be there.
I think two last and interesting questions on the growth stage, right? A lot of people complain that as a company becomes $700 million or $1 billion in valuation, what's the exit, right? Because everybody promises that you'll create a unicorn, but once you've created a unicorn, then what, right? You can till the time you don't do an IPO or somebody comes and acquires you, there's no exit, right? So, and in US and developed markets, and I'm sure we all have seen that larger companies come and acquire $1 billion company or $2 billion company or $3 billion companies, right? Visa acquiring Played at $15 billion, right? So those kind of things happen in the US and other parts of the world, but it doesn't happen in emerging markets yet. And we have larger companies. So do we see that changing? Do we think that the buy versus build story will change and we'll start buying then building everything on our own?
See, Indian market, you have many examples now when the startups are buying especially the unicorns are buying the listed entity when the very large. For recently, this Bharat Pay, which is our portfolio, they bought this PMC Bank. That was in
That's
India,
correct, yeah.
right? And recently, Pharmacy bought Thyrocare, right? So, a lot of such instances are happening, especially after this IPO success. Enough money is available with the startups to acquire, and you will see that happening more and more now because the size of these startups are going to be decathon and then hectathon. So when that happens, the acquisition is going to grow. I'm seeing the lot of acquisition activities happening in on ground these days, which was not the case in the past. So M&A is definitely in the radar of these large companies, and they are also seeing it as a future growth possibility. So there's another possibility that going and acquiring similar companies in Middle East or some other places, right? So Africa. So that is also a route which these companies are evaluating for sure. And we are hearing the news someday or other. We are hearing this every week or 10 days. We are hearing these kind of news. So when these maturing companies see a limited growth in India, of course, that's the only route which they catch. And you see in the gaming sector, especially Nazara has done that tremendous job. They've been acquiring companies left and right, and
That's correct.
they're large company. So there are precedences available in Indian market now. Who are the larger companies going IPO and then acquiring a lot of other companies in other markets.
Victor, your thoughts on a large tech acquiring small tech or growing tech, I would say that way.
I think at this stage, where what we're seeing is the developing more of the capital markets opportunity, right? And rather than the M&A route, is still the M&A route is still only on cross-border similar models, acquiring similar models. So the Ubers and the delivery heroes of this world.
Yeah,
In fintech, we have a prime example in Egypt that is Fowry, that
that's right.
IPO'd very successfully and is trading at a very high, very high multiples. So even in a market like that, you can find a prime example. So Saudi is developing their own like Nasdaq type market and pushing companies to go to that market even early on, even not at the unicorn status, but earlier at 2, 3, 400. And we've seen, SPACs in Nasdaq, like the one of Swivel in Egypt, not in fintech, but in ride hailing, by sharing. So more and more, I think capital markets is where people want to go next. And then, over time, as these companies become also bigger, there will be the natural buyers for other smaller companies as they develop. But I think we're still behind again compared to India, compared to China, compared to obviously US, Europe.
I think we all can together probably build something cross-border ecosystem over here, right? I think that's where I feel a lot of opportunity, and because we are placed strategically, all of us, I think there's an opportunity for us to do something. Coming back on valuation and fundraising, like I think we have 5 minutes to go, so I want to quickly hear your thoughts. And again, as a growth fund manager, investing at that stage, it gives me almost a heartbreak every day to look at the valuation, and second, look at the rounds they close in a day, they close in 2 days now. So are we living in a different world, unrealistic world? Do you think this is going to change, or this will continue for another 12 to 24 months because the liquidity is there in the market? So Victor, your thoughts first, and then Apoorva, your thoughts on valuation and fundraising happening at a crazy valuation, crazy speed.
Yeah, so I mean, us we are quite valuation sensitive, because we look at growth capital as already proven market fit already, with the strong KPI extraction. So we need to look going forward, what's going to be the exit price. And obviously we see now there's overheating in the market. In the early stages, it's maybe doesn't matter so much because it's about idea, team. But in our case, we do look at the fundamentals of the business, and definitely we struggle with some of the valuation of the let's say the formal sectors or the formal companies, whereby you have to give away a bit of return because the pricing is clearly very, very high. The issue that for me, there are two issues right here. One is that founders also have the expectation that they get the same multiple at Series A than to Series D. But obviously should not be the case, because Series A, you're not being valued on so much on your KPIs, right? And then in emerging markets, we see, I mean, we have to realize this is we need to deliver a premium return, because we have higher risk than other markets, so we cannot apply the same. We cannot compare apples and bananas, right? So we cannot compare a US multiple with a Nigerian multiple. This doesn't make any sense. So obviously that's where the challenge is, to be able to get on deals and get those prices that are reasonable and rational.
Okay. Apoorva, your thoughts on fundraising and valuation, both going out of hands, and the deals are getting closed in less than 1 day's time.
So, Sagar, this is primarily two reasons. Shot up in valuations is not by chance. It is because of some players who are very aggressive. They've been very aggressive in terms of their investments. I won't take the name, but I'm sure they've been very large player with very large checks who are sort of giving almost 1.5 or 2 times valuations and picking up the deals. So that kind of aggressive money is chasing Indian startups now. And second big development, and that is not just one player. There are 2, 3 such players in the market.
Yeah.
Right? And of course that sets the tone, right? When you are going even to a Series A or B, because the startups founders expectation is set there, because they know what's the end game going to be. The second thing, IPO has given a lot of liquidity. and every startup is now planning mid-size. Any Series C plus startup, has IPO in their radar. So they also, sort of see a liquidity coming from there. So these two instances, and then there are some underlying drivers, which basically actually working towards the growth of these sectors. Of course, banking integration is one thing which
Yeah.
we discussed definitely, but there are other underlying drivers also which are actually propelling the growth of this, especially fundraising and also the valuation parts. It's it's going to grow further because until unless it is hit by some large recession event, which normally ratify, right? So although normally these things are cyclical,
Yeah.
India is on in an up mode now. Maybe another 15 months or 2 years is going to continue for sure. And let's see what happens after that.
No, I think that's very helpful. I think interesting views both from you and Victor. I think thank you, so much for taking your time again. I think there was a lot of learning and takeaways from this session, especially for me as well. I think one that Apoorva that you mentioned that there could be 50 to 60 unicorns in India over the next decade, right? And 10 to 15 decacorns. That's an interesting space to watch out for everybody. And I think, Victor, you rightly mentioned that Africa, it's the whole Middle East Africa is 1.3, 1.4 billion economy, right? The TAM is very large. It's just that the space is catching up very fast. A lot of bigger companies are coming out and creating, and founders are coming out of bigger companies also in these markets. So there's an opportunity definitely worth considering. I think cross-border would be a huge conversation over the next 4 to 5 years. I'm very, very convinced about that opportunity as well. And I think seems like you guys are doing a fantastic job over there in these parts of the world, and PE funds are also coming into these categories where you guys are looking at now, right? So it's a bit of a competitive space as well. Valuation is going to continue to run ahead of itself. We all have to be mindful. We all have to be careful while we're deploying capital. And as long as the big boys are sitting in US and Europe and deploying capital at our entry points, then we are going to face competition, right? I think whether in your market or my market or any other markets, right? So no, I think overall, I think thanks, a great learning experience. I'm sorry we couldn't take a lot of questions, for people. We're running out of time. I'm sure this conversation can go on for another hour if we keep discussing fintech and growth stage investing. Please feel free to send us your questions, people. Sorry for not leaving much time for Q&A. Shivani, over to you.
Thank you, Mr. Agarwal. Thank you so much for joining us. Thank you, all the speakers, for joining us today and for this enlightening discussion. And thank you, all our audience, for joining us today. We are signing off for this session. Thank you.
Thank you so much. Thank you, Victor. Thank you, Apoorva. Thank you, Shivani.
Thank you,
Thank you, Sagar. Thank you, Apoorva.
Thank you.